Let's talk about pivot points. We will often hear market analysts or experienced traders talking about a market's price nearing a certain support or resistance level, each of which is important because it represents a point at which a major price movement is expected to occur. But how do these analysts and professional traders come up with these so-called levels? One of the most common methods is using pivot points, and here we take a look at how to interpret these technical tools. For pivot points, the R stands for resistance, the S stands for support, and P stands for the actual pivot point. There is no need to calculate where these pivot points go on the chart because most charting software today allows us to plot them as an indicator. So how can we actually interpret pivot points? It's important to note that the pivot point itself is the primary support resistance. This means that the largest price movement is expected to occur at this price. The other support and resistance levels are less influential but may still generate significant price movements. Pivot points can be used in basically two ways. The first way is for determining the overall market trend. If the pivot point price is broken in an upward movement, then the market is bullish, and vice versa. Keep in mind, however, that pivot points are short-term trend indicators, useful for only one day until it needs to be recalculated. The second method is to use pivot points price levels to enter and exit the markets. For example, a trader might put in a limit order to buy if the price breaks a resistance level. Alternatively, a trader might set a stop loss for his active trade if a support level is broken. Okay, so let's take a look at a few examples of how we can actually trade around and use the pivot points to improve our trading. Now, again, this is going to be fully dependent on how you actually trade and what time frames you use. Some traders may use the pivot points as a point to say, look, I'm going to set my stop loss here, and if the price does trade up to this level, then I'm going to be wrong on the trade, and they'll use the pivot points in that way. Another way we can use pivot points is as a point to actually exit out or take profit on our trades. If we take a look at the chart that I have open, I've got the crude oil chart. It's a 15-minute time frame. Let's direct our attention to this exact point here. We can see that the market opened around our pivot point and then it traded down for some time before eventually retracing back up and testing our pivot point line. Now, the way that I've actually set up the pivot points here is that the black line represents our specific pivot point. This is the most important line and area on the chart that we want to take note of every single day when using the pivot points. Then I've got our resistance lines in red and I've got our support lines in green. Keep in mind that these calculations on the pivot points are all done before the market has actually opened because it's taking its calculation based on the previous day's price action. Let's say that at this point, when we see this specific red candle form and a nice rejection off the pivot point at this point, let's say that we want to take a short position. A really good way of taking a short position off a pivot point here would be to, we say, set our order to sell at the close of this candle, which is our red candle. We could set our stop loss a few points above the actual high of that candle, and then we could either go for the first target as our support 1 or the second target as support 2, depending on how you actually trade and what's going to suit you. And let's see actually what would happen with this trade. Now let's bear in mind that of course every trader is different. Some would like to scalp for a few points and some would be able to hold for a little bit longer. I'm just going to delete the actual position so that we can see it a bit more clearly. We can see that the market at this point falls all the way down before we start seeing a little bit of buys coming in at around the support 1 level. However, it's not strong enough and we can see then the market does sell off straight to the support 2. Bear in mind, look how close the actual level is to the point where we start getting a lot of buying come in. If we look at any other point on the chart, it's pretty significant that this area here has found a lot of support, a lot of buying. So this is why the pivot points can be so powerful and such a good way to trade with. Taking a look at this price action continuing, we see that it then falls directly down into support 3, and this point, because this is around the market open at 8:30, the selling pressure is extremely strong and we end up actually breaking right through that support 3 level. Now with the pivot points, you can actually set it so that you can have multiple support levels, and I'll show you if we've set on one more support level here, we can see that again it comes down and tests it. Another perfect example of where we can actually set our price targets. Traders, another useful tool and another useful way of how we can actually use the pivot points to trade is, for example, if we have a shorter term time frame strategy that we already have. Let's say that we trade in crude oil on the 5-minute chart. We already have our setups, we already have our trading plan set. The way that we can use our pivot points then is, because remember the pivot points calculation is going to be based on the previous day's ranges, high, low, open and close. What this means is that it doesn't matter what time frame you're using on the current day. You can either be using a 1 minute chart or you can go all the way up to a daily. The pivot point calculation is going to be exactly the same on all time frames. So what this means is if we open up a 15-minute chart, I've put on a 15 moving average here. So I've actually blinded out the price action. You can have this on a separate chart and you can look at where the moving average is depending on the time that you're trading. Let's say we can do 50. If we do a 50 moving average and we're calculating, which means we're going to do 50 multiplied by 15 on the time frame which we're using, which is 15 minutes, we can look at it on a separate chart and say, on my shorter term strategy, I'm trading the 5 minute. I want to be taking positions based only off where this moving average is in relation to the pivot point. So for example, at this case, you can see that we are clearly trading above the pivot point for this specific day. What this could mean is when you go down into your smaller time frame chart and your smaller time frame strategy, you're only going to be looking for long trades because the moving average is above our pivot point, which is an indication that the market is in an uptrend. What if we are just pure price action traders and we don't like any indicators? Can the pivot points actually be useful to us? It definitely can be useful to us for the reason that we can always use the pivot point lines as specific levels to go for if we have targets. And maybe we have a strategy that's really strong in predicting entries, but we don't have a really good exit strategy. That's how we can use the pivot points. For example, we take our position, say we move into break even quite quickly, and now we don't know where to go for our profit target. We can just simply set them as resistance 1, 2 or 3 if we're long, or support 1, 2 or 3 if we are short. We can actually also use the pivot points to take entries as well. Now when we are looking for entries using price action on the pivot points, I would recommend we use it on a slightly higher time frame. Maybe a 30-minute is good. This is what I have open right now, and we're using it only to take our entries at that point. Once we've got our entry in, we are going to most likely drop down into a 5 or a 10-minute chart, put on a parabolic saw or a moving average and just trail our stop as it goes that way. This example, we have a evening star pattern right here that I see. And to take this trade, we would simply just put our sell right at the close of that red bar. We put our stop loss about a few points above the high of the formation. And then our first target, of course, would just be set as support 1. But like I said, we'll be going down into a 5 or 10-minute chart with a moving average or a parabolic saw to trail our stop in this case. The next day actually gives us another signal, and this is a bearish engulfer. Now, if we took the bearish engulfer trade, we would take our short position right there at the close of the red candle with our stop loss above the high of the formation, and then our first target is at support 1 level of that same day. Again, we'd be probably utilizing a trailing stop because we are using a 30-minute chart in this case. Before we do go, I want to just show you how strong the levels can actually be when we put the pivot points on. So of course I've got the 30-minute chart still open on crude oil, and I've set the pivot points now to daily. We can also set our pivot points to weekly or monthly, but as day traders we want to keep it to the daily time frame. Check this level here, how much selling we actually got into. The next day off the pivot point, which is in black, there was a lot of buying power coming in at that point, and the pivot point is traditionally going to act as a turning point in the market. Whenever the price is trading above the pivot point, we are bullish. Whenever it's trading below it, we're bearish. Here's another point where there was a lot of selling coming in into R2. Some buying pressure coming into S2 over there. A lot more turning points here on the pivot point again, and then some resistance coming into R1, and then 2 perfect trades if we had to take them long off of the pivot point as a turning point there. Traders, if you are struggling to set profit targets, you have a good system that is telling you how to enter into the market that you've been working on and you trust, but you're lacking in the department of where to actually set profit targets for, I would highly recommend trying out the pivot points and letting us know in the comments below if you find some use in them. This is just one example of the many trading strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. We have funded thousands of traders since we launched in 2017. Take a look at the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24 hours a day, 7 days a week. Track your trading performance using our advanced accounts analytics feature. Discuss trading ideas with other traders on the members area and the Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability at OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.